Okay, welcome back from coffee. I hope there was a good break, a networking break. I'd like to introduce our moderator for the next session on DFS in emerging markets. It's Dr. Sonia Kelly, who's one of the world's top experts on DFS. She's at the Center for Financial Inclusion and a good friend of mine and the DFS Observatory. Over to you, Sonia.
Great. Thanks so much, Leon. I wouldn't say I'm one of the world's top experts on DFS.
I would.
I would say I'm a very curious person, and my interest in DFS comes primarily from thinking about how DFS plays out in the lives of clients of financial services. I think right now is an extremely exciting time in this space. We heard a lot this morning already about the possibilities that DFS offers in emerging markets. But I think we're still at a disequilibrium between those possibilities and real life changes for low-income people. We saw a number of charts and figures and graphs that look like the hockey stick, the upward trajectory of mobile money adoption and mobile phone adoption, and I think that's really exciting. And my curiosity comes from that white space in the charts, the people who are still using feature phones, the people who are still not included. What does DFS mean in their lives? And what does adoption look like for them? What are some of the barriers to their lives becoming different as a result of digital financial services? So that's a little bit of background on where my curiosity comes from. Our goal for this session, we have an all-star panel here. I'm really excited. Our goal is to get concrete about what DFS looks like in emerging markets now. So not just thinking about the possibilities and the examples of the really exciting things that are happening, but also a more broad state of the practice. So to start us off, I'd love to invite Gunnar Kamner. He's the Mobile Money Services Director of GSMA up to the podium. I'm not going to give lengthy bios, but all of these people are very impressive, and you can read all about them in your program. And I hope that you're able to ask them more about their skills and experience later. Gunnar.
Cool. Thank you, Sonia, and thank you, Leon, and the organizers for having me and the GSMA here today. So I'm going to share with you the numbers. Going to a bit more depth about the numbers of what we call the mobile money industry, how it's performing and where it's successful in the world, and also a little bit about the priorities that the industry has and that the GSMA is supporting the industry or to achieve, hopefully. So to begin with, this is what the penetration looks like for what we call the mobile money industry. And the definition of mobile money, I think one of the key characteristics here that's important to point out is that we look at mobile money as a complementary service to existing financial services. It's often regulated as an e-money service directly by a central bank. But what's interesting about it is that it doesn't rely on existing banking infrastructure or even existing bank accounts or bank cards. So this is why you see that the industry is strong where traditionally you have very low bank penetration. So Sub-Saharan Africa stands out as the leader, followed by South Asia, both regions growing fast. And what's interesting about this, if you want to expand financial services in a meaningful way in these markets, under these circumstances, you need to build an alternative for cash in and cash out. How do you load your wallet? How would you get money on your phone? How do you get money out of your phone? So one of the key kind of challenges or key factors of success is if you're able to build out a physical presence of agents to cater for the population. And I think it brings to mind, I think there was a question from PayPal earlier saying, well, how do you overcome, how do you get customers to use these services? Well, actually, it's a lot of thanks to these agents, these physical human touch points that they're able to kind of show customers how to use the service, get them onboarded, get them to start transacting. So in summary, we heard some numbers earlier, both from Jason and from Consult Hyperion. But right now, we have mobile money services in 2/3 of low and middle income countries. There's about 4.3 million agents, the cash in, cash out touch points I mentioned earlier. And there's about 500 million registered accounts, and 174 of them are active. And we compare this number, again, zooming in on sub-Saharan Africa, we see that the mobile money industry, or e-money services, as the World Bank referred to them, surpassed traditional bank accounts in the sub-Saharan region, which is a great evidence that we need non-banks to complement the kind of the service offering that is available. I think banks in particular in sub-Saharan Africa have issues with fragmentation and kind of lack of economies of scale in having a strong retail presence. Whereas a non-bank, an e-money issuer, with the right strategy, with the right investment, can successfully develop both active customers and touch points for them to get money in and out of the systems. And I think what we've seen in the last years or so has been very exciting, because normally we only talk about M-Pesa from Kenya, and of course it's a massive success. But what's really good for me working with the whole industry is that it's not only about Kenya, it's not only about M-Pesa. There are several very successful providers out there. As you can say, that we have mass market penetration, or like critical mass penetration in several countries now, not only in East Africa, but West Africa, Southern Africa as well. And I think one interesting thing about mobile money as well, as some of you know really well, is that it started with kind of a P2P proposition. That's how these services grow. And in this case, it wasn't about splitting the lunch bill. It was about sending money home. So, of course, you start off with a very dominant kind of reliance on the P2P transactions. But what has been our focus working with the industry, and I know for sure, but with industry as well, is try to diversify that and trying to expand the use cases, trying to really build a much richer and broader ecosystem around these services. And as you can see, over the last few years, the industry has been able to achieve that. P2P transactions are now 2/3 of transaction values, for example, where before it was much more dominant. And what's interesting is that I think from a financial inclusion perspective, but also from a strategic perspective from these providers, is that if you're able to really you start with a transactional account, and you're able to build a very rich and meaningful range of products and services around it, that simple transaction account actually becomes incredibly meaningful and can fulfill a wide variety of financial needs of customers. And one thing that I want to point out also from the statistics, we have even more. I know it's a bit data-heavy slides. We have even more data, so we're happy to share with you even more data. But one interesting thing to point out is that I mentioned before the cash-in, cash-out networks. Of course, now when mobile money becomes more and more mature in more markets, having access to the financial infrastructure in regions or in specific markets become very important, and they become a very good source of funds. So we see that now through bank integrations and through kind of salary disbursements, cashing in via an agent is now only just 80%, which was over 99% in the beginning of the industry, when it was solely relying on cash-in points. And why is this important? Every time an agent makes a cash-in or cash-out transaction on your behalf, you have to pay them. So the mobile money industry maybe makes $1.5 billion in revenue. Over 60% goes as a direct cost to agents performing cash-in, cash-out. So if you're able to create more of an ecosystem around your transaction account, it's actually crucial for the sustainability of these services to continue to grow and to justify further investment. And this is just to show that we're happy to see that this trend is beginning. And as you can see from this chart, kind of transactions with businesses rather than people actually quadrupled in the last few years, mainly driven by bill payments such as electricity and water payments and so on. I think what's interesting in here is that the industry is still struggling a little bit with merchant payments, and it's actually one of our key priorities to make sure that we don't fall in the same trap as kind of the banks have done in Africa, where fragmentation is kind of becoming an obstacle to really create effective and meaningful markets for merchant acquisition and merchant acceptance. One more thing to point out that I think makes these services meaningful and useful is the kind of what we label the price revolution that has been driving for cross-border transactions or international remittances. So once a provider has established, customer behavior, customers are now comfortable to receive and send money on their phones, cash out and cash in as well. It's very easy to just expand that use case to also do international transactions. And this means that we can do that in a much cheaper way than traditional money transfer organizations can. So we did a study, and the cost is slashed in half, at least, when you're using mobile money as a means to transact. So this is, of course, a massive priority for the industry to do. Unfortunately, this comes with a lot of regulatory concerns about currency exchanges and things like that. So unfortunately, the one thing that is kind of slowing down the pace of expanding these corridors is making sure that regulators are comfortable, that all the processes are in place, and also that they're comfortable and their banking associations are comfortable that the banks take a bit of a more of a supervisionary role rather than an active role or a monopolistic role in international transfer. I think important to point out as well is the insurance, credit, and savings initiatives that we see also kind of being built around these transaction mobile money accounts. It's been a great surge of microinsurance that has came out of not only mobile money accounts, to be fair, but also just the mobile phone in general. And again, I think the success I've seen in insurance has really come from actually having an agent network on the ground for people actually calling up people to sell these services. I think the go-to-market strategy is very different in emerging markets compared to developed markets. Credit products are coming up massively in most markets where this is available, and of course often paired with savings initiatives. A couple of words on the priorities for us. So, for those who don't know, Gsma is a kind of the trade organization for the mobile industry as a whole, but we have a team which I'm part of and my colleagues are part of that is solely focused on mobile financial services in emerging markets. So we have a few key projects that we're supporting the industry. One is in order to continue to build a rich and useful environment for these transaction accounts to kind of flourish within. We want to create a plug-and-play environment. So we have an API harmonization strategy that we are. Okay, if I have more time, I'll go into a bit more depth on that.
I'll try to feed you a question.
Okay. Again, interoperability, ensuring that the industry doesn't suffer from the fragmentation that it inherently has, to make sure that we can be able to create efficiencies as an industry when it comes to technology or infrastructure, or participate with fair governance where that is a possibility. And also making sure that we as an industry can create, kind of using the scale of the industry as a whole to create really interesting markets for merchant acquisition, for acceptance, and also the standards that are required to support that. We have, because in general, I think regulation is a real issue in driving financial or extending financial services to those, particularly to those who are underserved today. So we have, I think maybe our main focus is actually a code of conduct, which is a self-regulatory initiative where our members sign up to consumer transparency, making sure that all the checks and balances are in place, making sure that internal and external processes are being followed, to give regulators a lot more confidence that even though these are non-banks, they know that they provide incredibly little risk for the monetary system in total or as a whole, but also they are very keen on consumer protection and making sure that no consumers are being badly treated by this. And I think my time is up, so thank you for listening. We have even more data that we're happy to share with you, so find me or go to our website. And thank you, Sonia.
Thanks, Gunnar. And hopefully we'll be able to get to some of that data as we get to the panel portion of this session. But for now, I'd love to invite up Dr. Daniel Gersten Reis from the Central Bank of Brazil, where he's lead in the Department of Banking Operations and Payment Systems. Gunnar did a nice job of giving us an overview of mobile money, and now we're going to hear about DFS grounded in the Brazil case.
First of all, thank you very much for having me here. Thank you, Leon, and thank you for listening to me and presenting some facts, some figures about Brazil, and also some about our regulation. I've been working with payment systems for quite a long time, but I'm quite new into digital financial services, just a couple of years working on this issue. So my first question when I started working with that is what the hell we are talking about. So from the one hand, and we can see quite clear this here in this conference. On the one hand, I was working with ITU, I was working with Gates Foundation, trying to figure out how DFS can improve financial access, financial inclusion, and that's what was one side of the discussion. On the other hand, I'm also working on the BIS with digital innovations, and we're talking about so many technical issues and trying to develop new services. And well, these are two completely different things, but they are always the same. And the first way I was trying to figure out how to solve this conundrum was exactly looking to both markets and see how one and other have things in common or not. So if in one hand we can have here my colleague from Gsma presenting how we can use digital financial service to improve people's life, we have the gap in developing countries from what we have of mobile access and also with financial inclusion. We don't have the same figures in developed countries. It's another problem. Of course, we can have technologies trying to reach and tackle all the problems also we have in developing countries, but the perspective of tackling the issues are completely different. And during my presentation, you're going exactly to see that we are going to move forward and backward in this kind of difference. If we look into Brazil, it's quite a huge country, and here you have a heat map about how banks are concentrated in Brazil and how we can tackle this concentration going with agents and outposts. So we can cover almost all the country. If you put mobile coverage, you can see that they are quite have the same coverage. Then we have the most access for financial systems. So one first question we can have here is exactly mobile that is going to help us to tackle this kind of problem in Brazil. Another question that we raised from this discussion is that, okay, if we go for digital currencies that we have already mentioned this morning, and probably we're going to go deeper on tomorrow. Okay, but we're going to digital currencies and so on, but okay, we always have to think about that. We don't have coverage in the whole country. So how we solve this kind of problem? It's exactly one problem that we have been discussing, and how we do with offline transactions. Is that a solution? But we also have with offline transactions the double spending problem, that one solution may be DLT or not, but is exactly what we are trying to figure out in the market right now. And if we go back to the mobile figures in Brazil, we say that most of sales of mobile phones is on smartphones. So once again, we're going to say how to tackle this problem is that the same solution that we found mostly in Africa with M-Pesa and others, trying to and being able to reach better financial inclusion figures in that countries that would help in Brazil. If we look in general figures for the bank industry, we can see similar figures that gonna presented here, and we can have the exponential growth of mobile services provided by financial institutions. And of course, when we are discussing with financial institutions, they are always trying to put their issues, saying that okay, we're exactly coping with all these things, and but if we take these numbers and put the throughput of the telecom industry, we say that they are almost the same. So one question that arises from that is what is driving this kind of exponential growth? Is exactly the financial industry that is trying to go digital, or they are just coping with all the demand from the customers that are already going digital? If we look in transactions by service channels, we have already these figures from the last slide. But what is interesting here is exactly to see what we still are dependent of going to a bank agent or a bank agency is exactly for making deposits and to raising up loans and financing. If we go back to telecom industry, and we could ask later to Gsma what is going on their market, we see here that we have a quite competitive market in Brazil with 4 major telcos in the market, and all 4 have their mobile payment solutions. And one thing is that they are trying to reach mobile payment solutions for quite a long time, but they still are trying to go forward with that. The biggest one, they have almost 1% only of their clients being able to use mobile payment systems. And the question is, what is exactly the problem that is going there, and how that could improve in Brazil? Because we still have 30% people that are not financially included there, but at the same time, mobile payments seems not to be exactly helping to solve this problem in Brazil. Cash-in is also a challenge. Maybe I can tell you a little story later on the panel about this experience that I try to make myself. But in the end, it's difficult to tackle some problems that are quite specific in the country. One example is the taxes that are applied in Brazil. The tax system is not really easy to make that in Brazil, because we have 3 different levels of government being responsible for each kind of taxes. And one example is exactly here, and this can make some difference in mobile payments. So that's airtime is on the state level taxes, and financial services on a municipal level taxes. So how agents can have a easy way of dealing with this problem. So a little about regulation. It's kind of clear that in Brazil there's no discussion that the digital financial services in Brazil are completely in the central bank, even to mobile payments. no discussions in that. We have taken quite a long road since 2005 till right now, trying to solve all these problems that we can go further later. We follow exactly the principles that we all like to say about interoperability, efficiency, soundness, and financial inclusion. So our law is completely driven to that, and is exactly what we try to do on our everyday. And just to sum up our regulation, we have three dimensions of payment institutions provision. That is an e-money issuer, postpaid instrument issuer, and acquiring institution for the card market. And for being a payment institutions there, you are subjected to an authorizing procedure at a central bank, and by a licensing by a scheme owner, unless you are, of course, the scheme owner. And for minimal capital, you have 2 million Brazilian reais for each of these activities, which it's about $600,000. So if I could sum up my presentation here, I would like you to have in your minds that we have in Brazil mixed market characteristics, both being from the developed markets with trying to put innovations and that all reason, but also with 30% of population still needing to have access to financial financial inclusion. So that there's, of course, opportunity for business on that. And the central bank is trying to promote competition, and that's our way to go further with all this market. Thank you very much.
Thanks, Daniel. It seems like Brazil has a lot going for it, with over 90% of the population having a smartphone, I think is what you said, a central regulator and no possibility for regulatory arbitrage, so a lot of agreement on who's in charge in the government, but still with the top telco only having 1% of the market share with mobile money, and 30% of Brazilians still not having access to an account. So seems like there are a lot of really good ingredients there, but they haven't totally coalesced into significant movement in financial inclusion, and I think that's a really interesting story, not one that I was really focused on. So thanks so much for that. We're going to move now into more of a discussion on what these trends in digital financial services mean concretely. The people on this panel come from a lot of different vantage points in the digital financial services space. So I'm looking forward to bringing out a lot of those different vantage points. And I'd love to start with Vince, actually. So Vince, you are the CEO of Telepin. Mm-hmm. And my understanding is that you provide software for telecommunications companies that are engaging with mobile money. And I'd love to ask you, from your vantage point, do you see innovations from the incumbent players, like the incumbent payment providers and the legacy payment rails, as threats in the digital financial services space, and especially for mobile money players?
Sure. So thank you again for the question. Thank you, Leon, for the invitation to speak at this event. So a bit of background on Telepin. So we are an enabler. We're a software company. We sell to the telco environment. We feed a lot of the data into the GSMA as well. What the GSMA presented there, we're powering about a little over between 20 to 25% of those platforms. A lot in West Africa, a lot in East Africa, a lot of expansion into Southeast Asia as well. And it's not just a developing market story, so we're very much the digital wallet in a lot of these systems, in Tanzania, Rwanda, the Congo, but we're also in developed markets as well, and what's important here is, like, for example, in Singapore, where we've got a couple of systems, it's a sending market solution as well. because in those countries, and I'd say very much the U.S. is akin to that, you've got a lot of migrant workers. A lot of people that travel to Singapore, about 500,000 a year, that are working and laboring and sending money back to Bangladesh, to India, to China, the Philippines. So I guess the question is, do we see a lot of innovation happening actually from the incumbents? In a lot of the markets where we have a digital wallet, there aren't incumbents there. There isn't a defined way of paying. There aren't credit cards. So there aren't traditional rails, except for maybe when I travel to an Intercontinental in Tanzania or a Hilton. So I've got a credit card system there, but I'm representing 1% to 2% of actually the people in that country. So there's nothing really that's happening there as far as traditional rails. And so we see innovation trying to happen. We see Visa trying to put systems into Tanzania, into Kenya as well. We see MasterCard trying to, replicate some functionality of a mobile money system, but it's this traditional card-based actually implementation. It's a prepaid product, and it doesn't really work there. And only because the convenience, you got to start off with the convenience first from a mobile point of view. If you want to add the card afterwards to use the traditional rails, and that is happening in a lot of the markets where we are, then it happens afterwards, but it's to use the product outside of the country. So if I'm in Cambodia and I've got a digital wallet that's there, I'll use my digital device or my mobile device within the country, but when I'm going to travel to the Philippines, I want access to those funds. So I'll use the partner card that's issued to me by the service provider or the telco that's there in order to use the funds that are in that country. So I may use the traditional rails that are there. And so we do see, and a couple of our systems are partnered up already into the traditional rails of Visa and MasterCard. Very little transactions that are happening right now. A lot of the breakdown happens when it comes to a commercial negotiation because, as you know, there's the big numbers that everybody sees here, the $1 billion of transactions that are flowing through their systems, and there are millions of dollars that are processed actually by our platforms in Africa. Everybody wants a piece of the pie, but it's counterintuitive to what we're trying to do because we're trying to bring the transaction value down. Traditional rails brings the price back up again. So we're fighting against actually the economics of Western thinking to Eastern implementations.
That's interesting. So while you may be up against Goliath, you've got a few stones in your hand, and those stones are the innovation, is what I'm hearing. I'd love to turn to Matt now. Matt Homer is a senior policy advisor in the Digital Financial Services Lab at USAID. Matt, one of the things that has been mentioned over and over and over again so far this morning has been the acceptance environment for digital financial services. And a few years ago, I heard somebody from USAID give a presentation on India and some work that you had done there. You could not have known when you did that work that demonetization would come to India. And I was wondering if you could give some comments on the acceptance environment for DFS, and feel free to ground your observations in the India example. I think that's a really interesting one.
Great. Yeah. Thank you, Sonia, and thank you for the opportunity to be here. I think the acceptance environment is absolutely critical. I mean, we're talking in this panel around the uptake of DFS, and I think as we've seen today, there is significant uptake with regard to adoption, not just mobile money, but also from other non-bank service providers and banks. But where we don't see the uptake as much is around usage. And I think as a community, if we really want to advance this issue forward, usage is only going to become increasingly important. So if we're talking about acceptance in general, so you mentioned India. I think India is a really interesting example because in many ways, and it's been raised earlier, India has built in the last decade or so an incredible set of underlying infrastructure to enable a robust digital finance marketplace. So you have a biometric ID that almost every Indian now has, which is enabled almost 300 million households to get bank accounts for the first time just in the last couple of years. You have the government digitizing their benefit payments. So India, of course, is a vast welfare state, and government social benefits touch almost every household. And so it's very significant that the government is doing that. And I think to Jason's point earlier, eliminating a lot of leakage, right, and fraud along the way. You also see the unified payments interface in India, which is a massive API that connects banks together so that consumers can make direct payments to friends without going through a third-party intermediary. So you see this really impressive foundation, and yet fewer than 6% of merchants accept electronic payments. And so when you get to the last mile of the transaction between the consumer and the merchant, that's where challenges still remain. And that really became clear last November when the government initiated this demonetization activity, where on November 8th, the government announced that from that time forward, about 86% of the currency in the country would no longer be legal tender. So there's two bills in particular that they were denotifying. And I happened to be there soon after that announcement, and it was quite interesting because you had a situation where people suddenly were trying to survive and live in the digital economy, and they may have had a debit card, they may have even had a mobile money account, or they would sign up for one. But there weren't a lot of places for them to use it. And cash the new bills that were being printed had not yet come into the system. They were not yet generally in ATMs. So consumers, you could not get cash at ATMs, generally speaking, particularly in rural areas. And so you were forced to try to live in this digital ecosystem. And I think what it did is it revealed or sort of just showed the importance of building a robust acceptance network for these type of payments, and just how important it is. And I think that's a challenge not just in India, but in many markets. And I think there are a variety of reasons why we don't see strong acceptance networks. There are cultural factors. There's just inertia when you're talking about a cash-based economy. There's also just this fundamental chicken and egg problem, right, where a merchant won't accept electronic payments unless their customers are demanding it, and customers are not going to pay electronically unless the merchant will accept it. So the challenge is around cracking that egg, and then you also have suppliers, right, on the other side of merchants. So you mentioned some of USAID's work. So we have an initiative in India called Cashless Catalyst, where we're trying to crack that code. We have a partnership with the government of Rajasthan, and we're in Jaipur, where we're conducting a variety of experiments to figure out how do you actually create the right set of incentives, the right set of business models. How do you work across the entire ecosystem, merchants, consumers, suppliers, to crack the code in sort of a coordinated fashion. But I think Gunnar, you were mentioning earlier that the approach in emerging markets is not necessarily the same as they've been in developed markets. I think that's very true for acceptance. And so I don't think we know what the solution is yet, but we need to get there, I think, pretty quickly if we want to really tackle this challenge.
Yeah, I guess in terms of the incentives, removing most of the cash from the economy is a really good incentive to transact digitally. I was there as well soon after.
Yeah.
I think we were probably attending the same conference, and I went to an artisan village that I've been to in the past, and very few of the artisans accept credit cards, but because of all of the cash, or 86% of the cash leaving currency circulation, I did not have cash with me. And somehow, all of the merchants found a way to use my card. And so my card just kept disappearing and going to different places in the market. And it ended up that there were just a few vendors in the market that had a way to accept cards. And everybody just made it happen to have a central person to go to. And so in terms of incentives, I mean, that seems
Although
really...
we've seen so we saw an uptick, right? And we saw a increased adoption after demonetization, and now it's stabilized and trended back toward the baseline before. So, at least, we have to watch it more going forward, but it looks like it hasn't created the type of long-lasting change that we might hope.
And is that in part because of additional currency entering the system with the lower value bills, or do you attribute that to just returning to another equilibrium kind of naturally?
Yeah, I'm really not sure. I mean, I think the more cash has come into the system, and so I mean, I think that's probably a large factor. I think that what it has done though is created awareness, and it's enabled some trialability. So people have at least tried it, right? And I think it creates a foundation, hopefully, upon which we can build, continue to expand usage.
Yeah. Great. Danielle, talking about the merchant acceptance environment, this might be a nice time to ask you about your cash-in story. I'm so curious to hear what that was that you mentioned. It should be on, so go ahead and just start talking.
Okay. Well, I try to be like a mouse labs a rat, so I was trying to. Okay. So we have a problem here, and I want to figure out what is this problem. So I tried to open an account in one of our MNOs, and it was really easy. I could download their app to my smartphone. What I was already circumventing the feature phone problem, but okay, I could cope with that. So I could download the app and open an account. And I spent like 6 months, and exactly the time they allowed me without having to pay them for having a known used account, trying to cash in money. So I could transfer money from my bank account. What I decided, no, that's not one of the core principles here is exactly you don't have to have a financial account with a financial institution to cash in your money. So that was trying the second time to circumvent. So I didn't do that. And you could pay a payment slip, which is quite common in Brazil, but you had to go to a financial institution to cash in money. So I spent almost 6 months trying to watch into the app if some store could reach up to where I could put money in, and no, it didn't happen. So and that's exactly something that we should bring up to our mobile operators, trying for quite a long time to get into this market and how to do it. I think they are really trying to do that, but they still couldn't reach a solution for that.
So what lessons did you take from that experience that you had trying to cash in, failing for 6 months, from your perspective at the central bank?
Last week, we were with one of the major MNOs in exactly, I was on your shoes, moderating the panel, exactly on that, and our MNOs were saying, we have no problems with the central bank regulation. I expect they were trying to say the truth, but they said that they had no problems with regulations. What we can bring from that, I think, is exactly it's an unsolved problem, and we still need some kind of innovations. We still need people trying to think on how to solve exactly this problem. It seems that after 10 years, the solution is not on the table. We have to figure out how to deal with it. So a lot of work to do on digital financial services.
Well, it's a good thing we have Gunnar on the panel. Gunnar, this is the perfect entry point for you. How can we solve this problem?
Yeah, that's a great question. So this is actually one of the key questions of my job, actually, or particularly more on the acceptance side. Because I think it's been said, there is a model that's worked really well in kind of traditional four-party model, payment scheme, global. If I travel across the world, it just works. But it's kind of fueled by this merchant discount rate, and the model doesn't really apply when you want to go really have a really good mass market acceptance network in a very low income market. So then the interesting question and the interesting challenge that the conversation we're having with our members is, how do we stack the incentives? If we don't have to think about the legacy systems, how do we stack the incentives to really create markets and kind of roles in order to develop this acceptance? And it's that's what's kind of still fascinating about this industry. I think is it's not easy, but it's a very interesting problem to try and solve. And I think or a few things that is clear to me, I think, is if you're lucky enough to be in a massive market like India, you have that economies of scale in your country. Most countries, I mean, maybe Brazil has it as well, but if you go elsewhere, you don't have many countries like that. So then you need to have more of a regional or a global solution, but still has a totally new way of stacking the incentives you're creating the incentives. So this is something trying to work collectively with as many partners as possible and trying to come up with, well, what will it look like? What is the infrastructure we can leverage in different regions? The Gates Foundation and the World Bank are funding a lot of infrastructure plays. So how can you kind of leverage that in order to create something that can work beyond it? But I think just to complete that note, I think it's really about the commercial incentives, not so much about the technology. I think if you get that right, I think you will have the technical requirements to drive this. We have good technology guys like Vince around, so I'm not too worried about that.
And could you give us a really concrete example of a market that has gotten it right that's not Kenya?
On merchant payments, or?
Yeah, on the commercial incentives.
Well, so this is a bit, so when it comes to cash in, cash out, I think we have 40 countries have, most of West Africa now, all of East Africa, South Asia, Pakistan, now with the new regulation in India, I think it's really coming up with cash in, cash out. So I think cash in, cash out has been solved, or that's a model that, apart from Brazil, clearly, has been solved or figured out. Then it's about who's willing to invest, who knows how to take this to market, who knows how to operate a sales and distribution system on a national scale. And I think in some countries, operators have that know-how. In other countries like Brazil, I don't think, maybe they don't have that competence. When it comes to merchant payments, I think that is when it becomes clear that actually, if you're not in an incredibly dominant market position, it's very difficult to generate that kind of, have that volume that creates these markets for acquiring and kind of building that acceptance network, why it's interesting to come together, whether it's banks or non-banks, banks,